Hey guys, what's up? It's me, Jonathan, and welcome back to Money Talks, where we want to offer you financial information and meet you where you are financially so that you're able to stick to your budget, manage to pay off your debt, and begin to save on your path to building wealth. Today, I want to help you really understand as an investor trying to put your money into the stock market, how you can start to build your mind frame and build your strength in understanding what the stock market means for you and how you can use that information to actually help you make better investment decisions. If this is your first time joining me here on the channel, go ahead and hit that subscribe button and you will be notified every time I upload a new video. Now, it's really interesting that this thought for me came up because I was doing research and I really started to understand that, hey, one of the things that we know we have to do when we start to invest in the stock market is change our mindset. But when you start to invest in anything, you really need to get a grapple on and a hand on what is this thing you're putting your money in? How does it work? How does it kind of function? And we know as many as any investment, I mean, business can be crazy, but the stock market just has a mind and emotions of its own. But I want to give you a few things that I think can help you as you start to really invest your money into the stock market. Start looking at companies, start looking at stocks, index funds, whatever the case may be, so that you can understand how this time can start to help you make sense of how you can start looking at the stock market. So why did I pick this time? Well, this quarantine time has really caused a separation between the stock market and the economy. And if you ever gotten a chance to listen a little bit to CNBC or any economist speak, they'll always say something to the effect of, hey, the stock market acts independent from the economy. The stock market, things that go on in the economy don't always directly impact what the stock market is doing. And the reason for that is because the stock market more looks at things from an optimistic future standpoint. The economy really does look at things from a more past standpoint. So a good example of that right now is the stock market has been going great over the past last month, but if we want to talk weeks, about 6 weeks. And the reason for that, a large reason for that is there's optimism as far as many factors and what's going to get the economy back going. So some of those factors include that the Fed has already came out and pretty much said, hey, we're going to give you an insurance policy. We're going to do whatever it takes to make sure this stock market and economy booms. So that makes the stock market be optimistic about America's future. The second thing is America's opening back up and businesses are starting to open back up. So now they are talking about the vaccine piece. And as you look at more things or as more information comes out about vaccine or the research around vaccine, you'll see that the stock market will continue to go up. And then recently, although this just kind of helped perpetuate it further, but there was 2.5 million jobs added in a time where that wasn't necessarily expected to happen, as well as the unemployment rate actually came down from April, so it was at 19%. Now, even though there was a glitch in the system and other reporting, it's at 16% for May. So those are factors again that give the stock market optimism. But right now, the key thing that everyone's showing that really is impacting the returns and what things are happening in the stock market is the healthcare information about potential vaccine, what that's going to look like, the research around it, and information that come around it. But then also the real heavy hitters of the stock market that's really kind of driving force of those blue chip stocks. So you got Google, you got Facebook, Amazon, those types of companies, and they really drive a big piece of our economy, those tech companies. But that just tells you, think about it. During this time, since we've been shut down, whose business has gone up? Amazon's definitely have. They're hiring people left and right. Google definitely has, with all the people jumping to the YouTube platform, all the people searching and doing things of that nature. Zoom, every other meeting is held on Zoom. So understanding that even though those are just a few companies, the success that they're having is driving performance. So how do you make sense of that? Well, like I said, all those things are more futuristic and looking forward as far as how we can fare for the stock market. It's not a huge indicator, but it gives optimism to America's future. And the economy, again, why does that not make sense? Well, think about it. Even though the stock market is going up, and even though those job reports have come, the unemployment has come down and there are new jobs being added, but the fact still remains over 40 million Americans are unemployed or have lost a job. Still, 40 some million Americans have a burdensome student loan debt that's kind of been on pause right now, but it still accounts for trillions of dollars in debt in the economy. People still struggling to kind of have food or put food on their table during this time. It's it doesn't really mirror, or it doesn't run. The stock market's not really running. And I know at this time it's not the best time to talk about the optimistic future, but as an investor, that's what you're looking at. You want to know, how can you start to really look and understand how to look at the stock market. And the really key about the stock market is, number one, understand the economic data, unemployment, jobs, things of that nature. Those can help, but those are not true indicators of what the stock market is going to do, because the day to day is getting bad in the economy and getting worse, but the stock market is still going up. And that doesn't show any parallel symmetry to how does one impact the other. So, does this make sense for you? Let me know in the comments if, as far as understanding the stock market and understanding how you should look at the stock market, if this makes a little bit more sense. Because again, understand that first, you have to separate the economy from the stock market. The second thing is, when you're looking at the stock market, understand that the stock market is more looking at things from an optimistic future point of view. The economy looks at things from an optimistic. It's optimistic, but it's also looking at past data, meaning once the job reports come out for May. Well, that just came out. May is gone. Now they're looking at what's going to happen to June's job report. That's kind of what we mean by past data. It's dictating its moves off past data. But in this particular scenario where we are at this moment in time, understand the Fed pretty much guaranteeing money to keep the economy going, doing whatever it takes, keeping that floor rate down. That is helpful as far as what the stock market believes the optimism is for our economy in the future. Again, I hope you enjoyed this video, and I can't wait to see you guys in the next video.